Hey everybody, unfortunately I have to make this video today, which is about that NIO just released a update to their guidance for the first quarter. If you watched my recent two videos, then you probably saw me talking about a potential miss on the guidance of Q1. And well, today they're issuing an official statement that they're not gonna make their Q1 lower guidance and instead are guiding to 30,000 vehicles. So unfortunately, this puts me in this awkward position to talk about this news release here, which I, rather not do, but here we are. And now the question is what can you learn out of this? And my first take here is, if you've seen my previous video, you know that going into the earnings report, I actually had the personal expectations that NIO would land at Q1 about 27,000 vehicles, and that was based on the fact that I thought it might be around a 12% or let's say 10% year-over-year drop in deliveries in Q1, and that would have been the general industry trend more or less. And that was my feeling, my calculation, my analysis, where I thought how bad it actually could get. And if you saw my live stream about the earnings, you saw also that I was quite surprised in putting out a rather, in my view, rather bullish guidance, despite the fact that some media actually even saw this as a bad or bearish guidance. But I didn't think so. I was happily surprised by this guidance. And, my point of view currently is that NIO put this into the earnings report in order to relieve investors, have something to look forward to have a positive takeaway. And maybe they were fearing that if they put out a too realistic guidance, a too soft guidance, then this could also reflect well on the stock, not well at the stock price. Now, the problem is if you do something like this, then you're setting expectations, and as we've seen in the last couple of trading days, the market is kind of sniffing things out. I mean, if a YouTuber like me can just analyze things and have a better view than NIO itself on the guidance, then that tells you a lot. Definitely Wall Street knows even more than us. They are able to do channel checks, meaning they have people on the ground, maybe drones flying over the factories. They have people watching the delivery centers and so on. So with that kind of an intel, it's a sure thing that the market knows these things are going to happen before they happen. And so what's the result here? It's making management look bad if they now come out and have to guide down their guidance. And they possibly had to do this because maybe compliance or the legal team called them in and said, look, we've set expectations higher. We need to issue a formal guidance with SEC and whatever in order to not being legally liable for putting out false statements and stuff. Doesn't really matter. The truth is that ultimately this is seemingly an ongoing problem with NIO currently, the way they are setting expectations. And I'm not saying that this is an easy task, which I could do better or anyone could do better. I think it's a challenging environment. I think it's very volatile. The fact that they are issuing a guidance within this month, 5 days into the month, and then 1 week before the month finishes, they actually have to sack this guidance is quite telling, isn't it? And unfortunately, this is no way how you can instill confidence in onlookers, if you're just an onlooker to the stock or even invested in the stock, right? So again, market was smarter, sniffed it out. Stock was already selling off going into this, so it doesn't matter how the stock actually reacts to this today. This could well be a low point because now the news is out, or it could be that shorts are pushing on this. It depends maybe a little bit on the macros and whatever. But anyways, they're kind of ruining a result here with 30,000 vehicles delivered in Q1 that I think is actually a good result. At least it's beating my personal expectations. As I said, 27K was my personal expectation, so it's above that. And actually also, if you analyze it, like it's I think 3% down year over year. So unfortunately, it's not showing growth. In fact, it's a decline from the last year. But as I pointed just out yesterday, Tesla China currently is trending minus 5% year over year, right? And so they are operating in a cheaper market segment. They are operating with lots more brand leverage and whatever. So shouldn't they be beating the NIO numbers in terms of growth numbers here? You could twist it around and say, NIO is here actually, despite the fact that they're now introducing new models during this month, and despite other circumstances, they're actually beating the market here with these numbers still, even if it comes to 30,000 vehicles. And that's the sad story here, that they're kind of ruining this with setting the expectations on the wrong place in the first place. And so, one way to think about this is that possibly, and I just called on that on X, there could be personal consequences. For example, if I were in Li Bin's shoes, I would definitely consider to let the CFO go in just picking a scapegoat here. I don't even want to know who makes the delivery projections or who's responsible for this. Also, who's responsible for this ad hoc issuance of stuff like these news releases, whatever. It's just again has this panicky feeling to it, or not well ahead looking feeling to it. That's the sense that I'm getting here, although that's rather on an emotional level, but I can't shake it off. So this is something, I'm not saying that's definitely something that should happen. It's a big, I don't want to change the job with this CFO, right? He's under a lot of pressure and stuff, and he might be a capable person with numbers and whatever, but he is consistently gave wrong expectations to the markets and then need to sack them one way or the other later on. And no, that's just bad looks. And I think the story for NIO now is actually, as I just pointed out yesterday, I think going into Q2, the numbers might actually look pretty and better year-over-year growth, especially in contrast to competitors. We have real catalysts coming up with sub-brands. Even if those brands should be a fail and not be well accepted, still they will boost the delivery numbers this year. And with things like that coming up, it's rather about reinstilling trust into the company at a crucial point in time. And unfortunately, I'm getting usually quite a bit of backlash whenever I point out negative things about NIO or see things in a different light. So maybe it's today. Again, it's just my personal opinion where I think NIO could make improvements, and I'm also not saying that this is something totally unexpected. Startups make mistakes and startups miss their guidance, and especially in market environments like this. I'm not saying that they are responsible for this in a way that the company messed this up. No, it's more about how you are actually communicating this, in my point of view. The fact that they're giving the guidance quite late in the quarter is actually a smart move, if you will. But then rather do not give a guidance or a more far out guidance, let's say half year guidance, full year guidance, instead of making those short-term adjustments that are, possibly not well received by trading algorithms and so on. In a situation where definitely this company is getting attacked by the markets, the competitors and so on, right? This is unnecessary pain which we have to go through as investors. And I wish they were just a little bit smarter around this. That's just my takeaway here. It doesn't change the overall story in my point of view. as I said, like the 30,000 vehicles are actually totally fine with me. It's actually a positive surprise they're making that. It doesn't change the outlook if Q2 will be good. If they manage to do all of those new sub-brand car releases and so on during this year, will be fine, and there will be revenue growth, there will be margin growth, there will be expansion on multiple levels. It just comes at days like this where it really hurts. It's not nice, and so why not send a sign, a signal to the market? I mean, one way is to regain trust, which is the long way. I think possibly they think they can do that at ultimately delivering on the vision, delivering on their targets over time. And so investors become more confident again, gain more trust. That's one way, but we're currently definitely not in that phase, as you can see today, right? So it's the opposite is the case. So until that switches, it's like it is. Another way would be send a signal to the market, make a cut, fire somebody, replace somebody, change something in the system, send a signal, try to reset the playing field, and that would be one way forward. I haven't got no other words, but I wish I wouldn't have to explain myself doing something like this, but that's the way it is. It's not the first time from NIO. I remember well when they even didn't attend earnings calls during the times where they're really struggling. Currently, the company is actually not in a terrible shape when it comes to the runway they have, the cash position, the new models, and the fundamentals of the company. There's always something to criticize and always something to worry about, but things like that, in my point of view, are necessary. Let's see if they learn from it. Thanks for watching.